The North American Marijuana Index, which follows the top cannabis stocks in the US and Canada, has rallied by more than 60% from the trough in December. But is the volatility an opportunity or just another crypto craze? With me to discuss the industry's potential is Morgan Paxhia, who's the Managing Director and Chief Investor at Poseidon Partners, who's in San Francisco. Morgan, great to see you. So the former CEO of Yahoo, Carol Bartz, told CNBC earlier in the year that cannabis is the new tech. I'm wondering whether you echo this view, and is that kind of how we justify these very high valuations on the public market?
Yes, it's interesting when you look at cannabis and you relate it to other periods of time, where there are other significant events happening. So, if you think of the Industrial Revolution, if you think the end of Prohibition, or you think the birth of the tech industry, these were all major events that created just incredible amounts of investment opportunity. So hearing Carol speak to that, just resonates well with us because, we feel that is a parallel, right? History doesn't repeat itself, but it sure does rhyme, as Mark Twain, said. And so, we believe that very much with cannabis as well. But just like in the early days of tech, there sure were a lot of failures. And, ultimately there was a very significant bubble that burst after that buildup.
Yeah, and I guess the risk is that this industry becomes sort of bubble-like because we have seen so much volatility in the sector, wild swings in some of the big players like Tilray to the downside recently. Do you agree that a lot of this has actually been driven by the speculators rather than the fundamentals?
Yeah, certainly you see a lot more excessiveness in the public markets. There's just limited access for most investors to be able to purchase or get exposure to cannabis as from an investment perspective, even institutions. So they're stuck with what's trading on the New York Stock Exchange or the NASDAQ, or some of the other funds are able to participate in Canada. But so you have this crowding effect that has caused just massive swings and just very, very significant valuations. But it is still a very fragmented market. It's still very early stages. So, from where we look, we still see much more sensible entry points. But if you're just doing only able to get a portion of the industry to look at, certainly looks very frothy in certain areas.
So what I'm hearing is that we've got to be pretty selective when it comes to this market. So where would you say the opportunities are geographically right now?
Yep, geographically, we are focused on the United States predominantly. We certainly are looking all over the world. This is a global movement at this point, but certainly in the United States, this is a market we've been investing in for over 5 years now. So we understand the nuances with the regulatory framework and how things are unfolding. And it's also the largest addressable market in the world. And we have it right here. And even where we sit specifically in California, where Poseidon is located, this is just as the largest U.S. state. And, even as if you think about it on a GDP, it's the 6th largest economy in the world. So we do have a lot of opportunity right here, but we are looking internationally as well, certainly watching the progress that's happening in Europe and how that interconnected global supply chain is going to all sync up. And so we have been doing some work south of the United States, down Mexico and down into South America as a means of centralizing low-cost production.
So which companies do you hold right now on the public markets, and which stocks are you getting most excited about?
Yeah, so it's amazing trying to look at the public stocks on a day-to-day basis, because it is amazing. If we say a stock today, and something, could be vastly different in even a week or a month from now. But some of our long-term public holdings where we participated early, one of our largest is a company called Green Thumb Industries, GTI. It trades on the Canadian Securities Exchange. It's also on the OTC here in the US. And so they're considered a multi-state operator. And so they have operations in many different states, and they've been doing quite a bit of activity this year with acquisitions. They have their earnings coming up, so it'll be interesting to see how that goes. We've also been long-term investors in GW Pharmaceuticals. That's actually one of our longest held positions in our fund, dating all the way back to January 2014. I think we were starting to buy that in the fund around $12 or $18 back then. It's amazing. And here it is today at 165 a share US.
Wow, that's quite a return. So, well, what about investing in this theme through some of the more mainstream stocks which are looking to take part in this growing industry? I'm thinking about Walgreens this week, for example, announced plans to sell those CBD creams across a number of states. Is that something you're looking to participate in?
Yes, yeah, we certainly watch the mainstream. It's just the problem is the contribution to revenue are still a rounding error for the most part. So we'll continue to watch that. Early on we did invest in a publicly traded company called Waters Corp, which is out of Massachusetts, and they were selling a lot of extraction equipment in the industry, and so that was one we did start to buy back then, but we've exited that quite a long time ago. Other stocks that people are thinking that have a similar path would be Altria or Constellation Brands, with the various transactions they've been doing, but still, for us, it's watching that contribution to the overall margin, or to the overall revenue of the business.
Now, we know there are quite a lot of hurdles in the way of this growth, in the way of the growth of this industry, whether it's from regulation, higher taxes in California where you are, funding, pricing as well. What do you think is the biggest risk to the sector?
Yeah, so the biggest risk we face right now is potentially, I think, heading into too euphoric of a situation where there's too much capital chasing too few areas of this industry and just getting bid up to the point where we have to deal with the excesses and bursting of a bubble, and what that can do to capital flows and sentiment and all those kind of challenges. By no means is this industry legalized, at the federal level here, just talking about the United States. And we do still see, fits and starts. If you look just what happened in New York and New Jersey, both seemed like they were programs heading to full legalization, and now they're getting delayed. It's nothing new for us. Especially back east, to see those programs take longer to get through. Massachusetts is a great example of still very, very limited access to a fully legal market. But if you step back and look at the longer term trend, it is still moving in the direction to full legalization in the U.S. and continuing to progress around the world, and Canada being the leader as they are already federally legal. But the risks are still such that taking again the United States, for example, it's federally legal, so banking is still very, very constrained, and at this point, it does seem like there is strong political support to resolve at least the banking issue, and so there's a couple of acts currently being reviewed. There's the SAFE Act, which is making some progress, and then potentially the STATES Act, and that would significantly reduce that risk issue on the banking side.
Morgan, thanks so much for your time.
Thank you.
That was Morgan Paxhia from Poseidon Partners joining us there from San Francisco. I'm Victoria Scholar, and thank you so much for watching IGTV. We'll see you soon.